Welcome back to Investing Talk Podcast.
Today we're looking at the company undergoing a major transformation, the one shifting from cannabis operations to become a publicly listed, decentralized AI treasury.
As usual, before we start, subscribe, like, and comment to this video to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis.
Yeah, let's do it. You don't just abandon your core business unless something is seriously wrong.
Exactly. I mean, this whole shift was driven by some pretty stark financial realities.
Yeah.
If you look at the Q3 2025 numbers, the company reported revenues of $9.75 million.
And that number on its own doesn't tell the whole story, right?
Not at all. The real problem is that it missed what analysts were expecting by over 22%.
Wow.
And crucially, it was a decline from the year before. So things were going in the wrong direction.
That's not just a bad quarter, that's a trend. That signals a real weakness in the business model.
It does. And the losses were, frankly, even more alarming. They posted a huge loss of $4.93 per share.
$4.93. And the consensus was what?
The consensus was already bracing for a loss, but this was substantially worse. It was the fourth consecutive quarter of earnings misses, and all of it really stemmed from that legacy cannabis business just not working out.
Okay, let's unpack this. This wasn't just a minor course correction. This is a full pivot, rebranding to Zero Stack and targeting decentralized AI. What is the financial engine fueling this massive change?
That's the key question, and it all comes down to a huge capital injection they secured in September 2025. It totaled $401 million.
$401 million. Okay, that's a serious war chest.
It is, and the composition of that funding is really what's critical here. It was made up of about $35 million in cash and then a massive $366 million in digital assets.
And those funds are specifically for the new plan.
Specifically, they're earmarked for accumulating zero-G tokens and building out the decentralized AI infrastructure.
Here's where it gets really interesting. They are positioning themselves as a unique entity. What is their real differentiator that separates them from standard tech or crypto players?
Their whole competitive moat is built on being the first publicly listed decentralized AI treasury.
Which means what exactly? For an institutional investor, what does that mean?
It means they can get exposure without the usual headaches. The company holds the network's core asset. Right now, they have about 123.4 million $0 tokens.
And what's the value on that?
As of October 2025, that was valued at approximately $231 million.
So they have this huge treasury.
Exactly. And holding it allows them to offer institutional investors regulated exposure on the Nasdaq to the zero-G network.
Which is described as an AI-first blockchain.
Right. It's a blockchain built specifically for the demands of AI. And for traditional finance, this is a game changer. They don't want to manage crypto wallets.
They just want a ticker symbol they can buy.
Precisely. And the final piece that makes institutions comfortable is the security.
So who's handling custody?
They partnered with BitGo. This is a huge deal. BitGo is an institutional-grade, regulated custodian.
So the assets are secure and compliant. That's the key for attracting the big money.
It's absolutely essential. It gives traditional finance the confidence they need to get into high-yield AI exposure.
The market clearly responded to this news. We saw some immediate volatility and surges. What do the technical signals and recent filings tell us about momentum?
Well, the most immediate signal was an after-hours surge of almost 6%, which brought the price up to $10.55.
And what triggered that specifically?
That jump was tied directly to the disclosure of their Regulation A filing.
Okay, the Reg A. Let's talk about that. It's meant to raise capital, right?
Right. The goal is to raise up to $75 million. They plan to do it by offering 30 million shares, priced at $2.50 each.
And that $2.50 price point, that's significant, isn't it? It acts as a kind of reference point.
It really does. It becomes a key support level. It's where the company itself is willing to price new equity, so the market watches that very closely.
And beyond just raising cash, what other moves have they made?
Shareholders have been busy. They approved the formal rebrand to Zero Stack, but the really interesting approval was for a forward stock split.
A stock split. So that would lower the price per share, potentially bring in more retail investors.
That's the idea. It's a key liquidity boost. The authorization is for a split anywhere from 2-for-1 all the way up to 10-for-1, and they have the next year to pull the trigger on it.
And what about the insiders? Are they aligned with this new AI pivot?
It looks that way. Shareholder approval also expanded the employee incentive plan.
To how much?
Up to 10% of the fully diluted shares. So yeah, that's a pretty strong signal that management is all in on the new Zero Stack vision.
So what does this all mean? A pivot of this magnitude always carries risk. What are the top concerns investors should be watching out for?
Absolutely. The number one risk is just execution. I mean, can they actually pull this off? Going from cannabis to decentralized AI is a massive leap.
It's a totally different skill set, different world.
It is. Having the $401 million is one thing, but successfully building the infrastructure and managing the yields, that's the real challenge.
And the old business is still a drag on the financials for now.
For sure. The pressure on their free cash flow from those operational losses will continue, probably until we see the Q4 updates in early 2026.
So there's a period of uncertainty there. What about dilution?
That's another big one. Between the Reg A raise and the expanded employee incentive plan, you're looking at a tangible dilution risk for anyone holding shares right now.
So your piece of the pie gets smaller.
It does. It's the cost of funding this whole pivot, but it's a real risk to consider. And then, of course, there's the external risk.
The crypto market itself.
Exactly. Their fortunes are now tied to the zero-G token. If the broader crypto sector takes a nosedive, the value of their main asset, that $231 million treasury, goes down with it. That volatility is just part of the deal now.
Connecting this to the bigger picture then, what timeline are analysts suggesting for investors interested in this new venture?
Well, the analyst target is sitting at $23.50.
Okay, so significant upside from here.
Potentially, yes. But the timeline to get there is really split into two different horizons.
Two different ways to play it.
Kind of. First, there's a potential swing trade opportunity. We're talking a 3 to 6 month window tied to near-term news.
Like the stock split announcement.
Exactly. The forward split news are those Q4 updates that will finally give us a clearer picture of the financials post-pivot.
And the second path?
The second path is the multi-year investment. This is the long-term bet on the entire thesis, that the zero-G network will be a huge success and that ZeroStack becomes the go-to regulated way to invest in it.
A much higher risk, higher reward play.
For sure. It's a bet on the long-term growth and the yields generated by that network. This company is essentially swapping declining revenue for AI network yields. The key question for investors isn't about their past, but whether they can leverage that $231 million token treasury and the institutional appeal of a Nasdaq-listed AI proxy to dominate this niche high-stakes bet on the future of decentralized computing.
The fascinating shift. Don't forget to subscribe to Investing Talk podcast to keep up with the biggest movers in the market.